All right, just a day to go for the budget, and then the vote on account will have FM speech elaborating on hopefully every aspect of concern, be it markets, corporate sectors, investors, or taxpayers. Now, 2019 as an interim budget was full of surprises. Should we be expecting something on the same lines? What's the analysis or expectation from market experts and participants? Let's get on board. Today I have with me Mihir Vora. Mihir, hi, and welcome to the Money Show. And I believe you have a very strong lineup for the budget day as well, going across channels and decoding the budget. But then, since we're talking about pre-budget today, my very first question that I want to ask you is what kind of a budget would you present, though it being a vote on account and 2019 was a complete surprise budget, if we have to continue the same kind of momentum, and if you are the finance minister, what is the kind of budget that you would be presenting?
Hi, Kavita. Thanks for having me on the show. Uh, the good thing about budgets these days is that most likely they will be non-events because a lot of the taxation policies and slabs, etc., have been simplified to such a great extent. Then there is no need for major tweaking around, frankly speaking. For example, the GST rates anyway are decided by the GST Council. The corporate tax rate slabs have also been rationalized, and now we have 25% corporate tax. So it's a pretty competitive, globally competitive tax rate. And even on the individual side, the new taxation regime, which the government really wants people to shift to, is also quite simple compared to the otherwise. So not much tweaking left. So what remains to be seen is what the government's assumptions are in terms of the spending patterns. So for the last 3 years, we've seen that government has really been conservative, and rightly so, in revenue expenditure. So subsidies, etc., have been quite controlled. And even last year, for example, FY24, the growth in revenue expenditure was barely about 3%, whereas the growth in capital expenditure was almost 30% for the last 3 years. So a big thrust was seen in capex, and we would like to see that that thrust continues, whether it's on defense or roads or highways or infrastructure, railways, etc. The markets would like to see capex continue. However, it is an election year, and we have seen some rural stress building up. So there may not be as much of a case for curtailing the revenue expenditure so much. So probably we might see some revenue expenditure growth at the cost of capital expenditure. If that's the situation, then that might be a bit of a debate for the market. But otherwise, I don't see any major big bang issues.